Hi there traders, welcome to Elite Currency. My name is Chris and this video is focused on Bitcoin and other cryptocurrencies. Let's take a look at the charts. Alrighty, so let's take a look at Bitcoin versus the dollar on the daily chart. And 2 days ago we had a video where we explained that we're looking at this particular fib, which is key for the potential wave 4. Is this a wave 4 or are we looking at a bearish continuation? Okay, so from my perspective, I am leaning towards a wave 1, 2, 3, 4, and up we go for 5, as indicated 2 days ago. And I still think the same because of the fact that price had shown so much momentum above the 21 EMA. I think that this is a wave 3. So I think the pullback towards the 21 EMA is a potential support that could be used as a bouncing spot. Otherwise, the situation has not changed much. We are at these fib levels that are usual for a wave 4, 38, 50 fib, are typical wave 4 bouncing spots, 23.6 sometimes even. You do see the price stop there for a few candles. If price breaks below the 50 fib and the 21 EMA, I would already be a bit worried about the upside. And I think that is a kind of a dangerous event or pattern in that case for the bulls, because we have a supply and demand zone here, support zone. We have the 21 EMA, we have the fibs. Price should not retrace deeper, otherwise I am a little bit doubtful or skeptical whether this is indeed a wave 4 or 5. And specifically, of course, to break below the top of wave 1, which is here, because the wave 4 cannot go and enter into the price territory of wave 1. Basically, that would be a spot where it's invalidated, and we're probably looking at an ABC to the upside. And in that case, that changes totally the perspective. In that case, we might be headed for a lower low. In that case, we can connect maybe these bottoms and we can connect these tops like this, and we're looking at a channel to the downside, and we could see maybe price challenge 5,000. If price stays above the fibs that I have in mind right here on the daily chart, sorry, there we go, let's zoom in again, then I think that a rebound back up to the targets here, minus 272, minus 61.8 target, is possible. We'll finish wave 1 or A. We should see a 3-wave down for wave 2 or B, and then move up again for the 3rd wave. All right, that's what we're expecting. So let's zoom into the 4-hour chart. Let's take a look at this 4th wave. So far, we see impulse here, and we see pretty much corrective price pattern here. We see ABC, we see a correction, and we see a kind of an ABC again. So it looks like a double zigzag to me, and price is bouncing here at the S1 weekly pivot point, 38, and the long-term moving average of the 4-hour chart. And we're seeing some bullish price action appear as well, we see 2 bullish candles appear. So I think that this is making a bounce reversal back to the upside more likely. I think that the patterns we're seeing here in terms of waves, chart patterns, zigzag patterns, and candlestick patterns, and chart patterns, I think I mentioned already, is confirming what we expected. Here you can see that supply-demand zone a little bit better, very strong zone. So I would expect price to move up, punch through the 21 EMA, but not fully break above it. Make a little bit of a pullback still, and then if it is a wave 5, then break through that trend line and start probably the wave 3 of that bigger wave 5. So the most conservative, the most safest perhaps approach would be to wait for the break of the trend line after it bounces. So wait for the break, wait for the retracement, and then wait for the next break, the 2nd break, basically. That is a safer approach than trading it still in here. But of course, it depends on how a trader wants to approach it. Certainly, fib traders would be interested in looking to potentially trade it here because it is at a bouncing spot, and we shouldn't expect price to go below it. If it does, then as I said, it's already not looking good for the bulls. So let's see if we get the confirmation, which is this breakout, and if we get the push up to the fib targets. Now, regarding Ethereum, we got the break. I wanted to show you that we did get the break of the bear flag pattern that we saw on this one, but also on other cryptos, and here we got the break. But basically yesterday was bearish, the day before was bearish. So I said look out for this breakout candle. We should see more downside, at least to re-challenge the support levels down in here, this support, and I mentioned this one, I think, and that's what it did. Now we could be at a double bottom, potentially. I think I mentioned, sorry, I mentioned this bottom. There we go. So we could be at a double bottom. It depends. We are seeing price respond to the upside a little bit following Bitcoin. It does look at the moment like perhaps a ABC correction too. So the patterns are not as clear as on Bitcoin. I do think that this is looking like a bear flag, but double bottom could stop it. So I would probably wait for today's daily candle and this week's weekly candle to see how price responds. This was a good breakout on an intraday time frame, but small movement, small space. Now I would probably just rather wait and see how price responds to this support. Look how the daily candles look like today, tomorrow, and the weekly candle looks like, to get more info if price is indeed bouncing in this zone or breaking through it. I lean towards a bounce, but yes, considering the corrective and sideways price action here, the bulls don't have much to hold on either. So rather probably just wait and see how this weekly candle ends up. If it is a doji and the close is all the way up in here and it has a wick at the bottom, that would change things and look more interesting. But that's something we'll discuss over the weekend, because that's when we'll have a new update, 3 updates on Bitcoin, 3 updates on euro dollar and pound dollar. So wish you all good trading. Of course, more analysis you can find, even more, at elitecurrency.com for free, and wish you all good trading. Cheers.